Welcome to the TMT Daily Strategy video for Monday, January 11th. Well, guys, we had a nice little run yesterday, last week actually, the first week of the new year. That one Monday was not a bad, was not looking so great, and all of a sudden we turned around and we're making all new time highs. Market extremely expensive. We talked about that. We'll get into it in a moment, but we really want to be paying attention to now is the 10-year yield, right? Rising yields are not good for equities, good for bank stocks, but not good for equities. And we are breaking out here. I'm going to show you. This is the TNX. This is CBE 10-year U.S. Treasury yield. Now you don't need the 10-year feed. You can look at the TNX, and what you do is just going to move with decimal over 1 to your left, and that'll get you what the rate would be, the yield. As of right now, it closed at 1.112%. And anything above 1 gets kind of scary because a lot of these funds that are arbitraging yields and bonds, they're going to have to sell. And when they start selling, it's going to put a big trickle effect on the equity market. So you really want to start paying attention to these yields. I look at them every day. Don't show them to you every day because it's boring. Nothing really to take note of. Only when we start breaking out of these levels. We have a nice ascending triangle here, and there's plenty of room to run from when we were back up of the pre-corona levels back in 2020, February 2020. You could see that. And now they have a position where they're unwinding. Well, if they have to unwind, and these yields continue to move higher, well, they're going to trigger a big sell-off in the equities. And in addition to that, over the weekend, we have major cases of coronavirus now again, really excelling now, getting really kind of scary, to be honest with you. We're down about 290 in the Dow, S&P down 32 and a half, and the Nasdaq down 107, Russell down about 25. So all it takes is one little pop of the balloon, and we start seeing a trickle effect. Now, like I said last Monday, this does not make a trend. One day down does not make a trend. We need several days of backing and filling at certain levels when we start breaking down, and then we can start looking for a correction / maybe a crash, because usually corrections happen and then all of a sudden it's followed by a crash, right? Because what happens is buyers are buying higher, right? And sellers are selling lower. So when we get the opposite effect, where we have the retail crowd, the Robinhood pundits, the pajama traders, if you will, but continue to buy at these lofty levels, and when the market goes lower, they can't endure the pain anymore. They'll sell at the lows, and where the institutions and the professionals will start looking to buy, just like it happened here in the coronavirus when we put together that COVID-19 portfolio for our coaching subscribers. So that's something that we are now in the process of doing again. And check your emails for the coaching subscribers. I'm going to be sending emails out for this week's a mentoring session. Okay, so here's the 10 years. So be very careful here. Again, if you're long, we want to make sure that you're protecting your profits, because risk off happens extremely fast, guys. All right, let's take a look at our VXX. And our VXX here, we have an ATR of below $1.97, I believe it is, and now we're sitting here. So we'll see how big of a sell-off we do get, if any. If they come in and buy the dip again, we'll just have to pay attention to that. But once that does happen and we start to get a big blast off, then I think we're going to be looking at the big spot's going to be that 200-day moving average. But our first line of resistance is going to be 1735, then 1884. And then if we can get back above that, we'll have a nice little beeline shot. You can see this by our thin zone, where we'd have a nice big run up back to the 200, the 2860. Now, remember, guys, things get out of hand. You could see this go right back up to 80 again. But again, who knows what's going to happen when it comes down to what's going on with this coronavirus. But I do think that there's a canary in a coal mine somewhere where I think we're going to get a real nasty sell-off. Again, guys, it's the timing. I don't know when, excuse me, but if we continue to monitor and get more price data, we'll be much more better prepared when we're looking for that pullback. And again, like I mentioned before, I will be putting these areas of support when we do get that pullback, because when we do get short, we're going to see where we're going to be taking profits. Just don't want to clutter up the screen right now. So the first area is going to be that that Wednesday pop right on that 200-day at 370.23. That's the symbol we want to watch on the spiders, 370.23. You can see that MACD is extended. Everything's extended here. You can see that we're in the overbought section of above 70 in our RSI as well. So just like I said, let's take it one day at a time. It's only been 1 week. Here's the cues again. Instead of going into value, they're still pushing these Qs, these FANG stocks up to the stratosphere. I mean, yeah, I've never seen anything like this. 27 years that Amazon and many of these stocks have doubled and tripled since the March lows. Just kind of real crazy here. Got a buy signal here in a MACD, but again, we're very extended, and we're at that 60, that 66, getting close to an overbought reading. But like I said, guys, not that I would look to be buying anything here. If anything, I'm adding a little bit to short in the Qs here, because this will roll over real fast. A real good short candidate. 309.67 and 298.57 are your two areas of support. But like I said, I will be putting out our pullback zones here once we do get some sort of a trigger that we're starting to pull back here. All right, now is the IWM. IWM was weaker on Friday out of all of the indices, and we do got that gap area here right around that 196. So that's going to be that first line here of support, is that gap area here. So watch that along with that 221 SMA. Again, overbought. You can see that into that 74, the RSI, and then again MACD as well. MACD actually issued a sell signal on Friday, so it'll be interesting to see where the Russells will trade today. Next is going to be the transports, and transports recovered. As you remember, they broke down below the 21 SMA, now at the right to the 50. So that 221.29 will be that area of support, along with the 216.76 on the 50-day moving average in the transports. Next is going to be our diamonds. And you see that gap? That's the gap here that we're going to be watching, paying attention to real closely, is that gap area. And that's going to coincide nicely with that 200-day, about 295. That's the bigger area, 295 down to like about 290 in the diamonds. 308, excuse me, 308 will be your area, first area of resistance, and then the 296. That'll be the gap area of support here. All right, next is going to be the gold, and we talked about gold, and we talked about how that Bitcoin's getting crushed right now. I mean, the whole market in the overnight, actually over the weekend, and I do watch that cryptocurrency market. That's going to be a great little asset to have in your portfolio if you desire to. I mean, I think everybody should have a little bit of Bitcoin, some gold, some oil, just to balance the portfolio out. But it's up to you if you feel like you want to take that on. But Bitcoin getting crushed. Here's gold took that 21 SMA 200-day moving average right out around 172, and then broke back above it. So let's watch this spot here, because remember, look, I mentioned to you before, risk off happens really fast in gold, and look at how fast look how fast gold actually came in within 3 days, took out about a month's worth of price data. So just let's be careful here. Let's be mindful of what we're doing. Pay attention to that 10-year. For the mentoring subscribers, we're going to be hopefully closer than putting out a short list quickly, which we are gathering, and we've been changing ever since. But let's pay attention to what's happening for the next couple of days. Watch the 10-year, the TNX. You want to be careful with that. If that continues to stay above 1 and even breaks above 1.5, all right, I think you're going to see equity market pressure here coming in this week. Have a great day, and we'll see you tomorrow.